So Ben, it's back. Top 12 stock picks for 2017, which was our cover story for this week's The Edge Weekly. And what are some of the macro events that has been highlighted by fund managers and analysts for 2017?
So I think we've seen most of the worst pass already. We've seen Brexit, we've seen the US presidential elections. For 2017, the thing to look out for would be our general election.
Right.
Yeah, and that's going to create a lot of uncertainty. But even in this environment, there's still some areas of opportunity. And speaking to fund managers, we've highlighted three main areas. It's plantations, construction, and oil and gas.
Plantation sector continues to be the bright spot, isn't it?
Well, with the rebound in CPO prices, people are taking a closer look at plantation stocks again. They've always been profitable, even when the CPO prices fell. Well, most of them have been profitable. The question is whether there was any growth to it. So now they're looking at planters with good yields, good CPO production, and planters with relatively young trees.
Right, and of course, the affiliate capital management CIO Ang Kok Heng has mentioned that plantation is still a long-term play for investors. So should investors keep or continue investing in plantation counters?
Well, plantations are very cyclical, and I think we've seen the bottom of the cycle. So that's why fund managers are very keen on the sector. I think one that stands out is TSH Resources, has above average fresh fruit bunch yield as well as CPO production.
And of course, construction continues to be the booming sector. We've seen a lot of billion ringgit contracts awarded, in the industry. So what are some of the outlooks that you are seeing? Seeing for the construction sectors?
So construction is one of the few sectors that we have some certainty that projects are coming out and there's going to be work. And these are huge projects. We have the second MRT line, we have the third LRT line, we have the East Coast Rail Link, we have the high-speed rail. So these are a lot of projects in the pipeline. They're not going to be awarded next year, but that's going to give a pipeline of jobs so that the construction companies will have some earnings.
And moving on to the oil and gas sectors, Maybank Investment has upgraded the sector to positive. Why do they see positive in this oil and gas sector?
So the big news this month was the production cut that OPEC members and non-OPEC members agreed upon, and that's seen to support oil prices at about $60 a barrel.
Right.
So this gives some visibility. Again, it's not certain because some of the members may cheat. Some of the countries may cheat and increase production, but it does offer some stability to oil prices. And that is seen as a good signal for a rebound for the oil and gas stocks. So fund managers are looking to bottom fish in the sector.
Right, and of course, weaker ringgit continues to provide opportunity for export counters. Why is that so, or is that going to be the trend for 2017?
I think that's just on the currency play, and that's a little bit short term. If we see a strong recovery in US growth, then yeah, sure, exporters will be more in favor actually.
Right, now Ben, the bottom line is, what is the outlook for the 2017, going forward?
So if you are long, like most of these funds are, then you try to pick stocks that minimize the uncertainty, and that's why our stock picks are such. Stocks like TNB are very resilient to uncertainty. Yeah.
But it's not all that bad, right, in the market, despite all the uncertainties.
I think it's actually quite bearish in some areas, especially the small caps.
For more on the story, pick up a copy of The Edge Weekly at all good newsstands.